appropriate. The historic reference to Roman times, the Ides of March were always a kind of an uncertain period. And it certainly feels like we're in that at the moment. We've got Brent crude oil trading down this morning in Asian trade, but nothing dramatic today. Only 0.25%, but below the sort of $71 barrel level on Brent, and notably on WTI down below $68. So we're clearly in the downward draft, although that downward draft does seem to have slowed as the week has gone on. The further we've got away from the OPEC decision, the announcement that they will indeed proceed with supply cuts, the initial response was quite dramatic from the market, significant enough decline, and since Monday it has eased off. The rate of decline has slowed down. Ali Al-Riyami, consultant and former Director General of Marketing, Ministry of Energy and Minerals, Oman. Your thoughts, Ali, on the week, and particularly starting with the OPEC Plus decision. We were all together in IE Week last week in London, and the consensus by a country mile was they were not going to do this. It was going to be a continuation of current plans. Your thoughts on the decision to actually proceed with increases and how it will impact oil prices as we move forward?
Good morning, John, and welcome back. I think you are in Dubai already. I'm in Muscat. And I mean, this decision took everybody by surprise, actually. Nobody was expecting OPEC to take the decisions to bring back these volumes and to go ahead with their plan, actually. It's not to change anything. The plan was to bring back the volumes in April, and they stick to their plan. But the fundamentals, I think, and also there was no enough justifications for them to go ahead and do this. I don't see any reasons at the moment, but maybe I'm sure that they have a strong reason. Could be, and I'm saying this could be one of the reasons that maybe they have internal pressure from the 8 countries, similar like United Arab Emirates, maybe Kazakhstan. They've been always pushing for their productions to go back to the market because of the investment that they did, and they see that they have a big capacity. So this could be the reason. The other reason could be also, the American administration, maybe Donald Trump is pushing also towards, bringing down the prices. The other reason, and which is, I don't think it is a reason, but maybe they are proactive. Maybe they see that the market will be tight in the coming few months, which doesn't really, the situation at the moment, it doesn't really support this. But nobody understands, nobody knows exactly what happened during this meeting this time, and to allow these volumes to go. Although shown that the volumes are quite small, insignificant, 138,000 barrels, but this is the beginning of the long journey up to the end of next year, maybe, to bring back the 2.2 or maybe more than that. We don't know what is going to happen in the coming few months. So we should just wait and see. Normally, the market reacts negatively when we have this kind of news, but and then later on, after a few days, few weeks, it will start to correct itself, and we just need to wait and see what is going to happen.
We certainly do. It certainly the reaction has happened, at least from the market. Russell Robertson, Chief Commercial Officer at the Gulf Mercantile Exchange, sitting in Singapore. Russell, the other big sort of tug of war on the direction of the oil market this week is the China National People's Congress meeting in China. They sort of put out there yesterday or overnight a lot of their sort of big positions, massive increase in budget deficit. The budget deficit is to be a 4% of GDP, but a whopping 10% of revenue, according to Bloomberg calculations, that the money the government takes in versus what it's going to spend is a 10% deficit. I wanted to get your thoughts. How is that the sort of floor on the oil price, this sort of China bazooka stimulus?
Yeah, I quite like this expression, the bazooka. It sounds very aggressive, but when you look at pricing now, I mean, we talked a lot about this last week, and I think this is more of an OPEC thing going on at the moment, but we were in the camp where when prices were getting up to 80, that was sort of a good out for OPEC to start releasing some barrels. I'm surprised they've done it so vocally. So where we're actually at now, I mean, when I look at Oman and the Middle East, we're trading at that $70 mark again, which going back to a trading perspective, technically is a really, really big number. So we
Why?
quadruple, even triple bottomed that in last December. And back then, 2 months ago, we were very negative pricing back then. I think most people were bearish. In the last few weeks, we went into bull mode. But you look again today, even the spreads and the sweet sour spread are back to where they were. I mean, Brent Oman's trading around flat now. That was close to $3 just a couple of weeks ago. The curve, the M1 M3 spread blew out to $5. We're back down to around about one, less than around just over $1. Sorry, just over $1. So that's just everything just come back to where we were last December. So I think technically it looks a bit heavy again. And to go back to your question, the fact that we're now getting some additional lower potentially demand forecasts coming out of China based on those numbers, we could go back to that remit that a lot of people are expecting this year to move back into that $60 to $70 range instead. So we're at an important place here. So I'm very interested to see what's going to happen. It definitely feels like we go into some news, readjust, recalibrate, and then wait for the next set of news. It feels very much like that at the market at the moment.
Let's welcome Matt Stanley, Head of Market Engagement at EMEA and APAC at Kepler. Matt, good to see you. The other third sort of leg of this stool pulling the tug of war of the oil markets is all things Trump. And I went to bed last night a little bit nervous because he was doing the State of the Union address, and I woke up pleasantly surprised that the headlines were fairly as expected and somewhat mediocre in terms of his bombastic recent weeks. But notably, the big piece of his puzzle, there's lots of noise, but at the core of it, from a global point of view, of the tariffs on this week now on Canada, on Mexico, on another leg of tariffs on China, the big warning to Europe. How big a factor do you think that is playing in the oil price and the direction of travel for demand?
I think he's still talking, isn't he? No one could shut him up for about 6 hours. I think he's still going. I don't know. He's St. Bernard is passing him some water right now, so he's all right.
It's sort of Hugo Chavez-esque, or what was the other fella down in Cuba? Castro-esque. They went on for hours and hours.
Exactly. Watch The Apprentice, by the way. It's a great film about his early days. It was an Oscar-nominated film. It's a bit frightening, actually. The Trump effect has been there since, November when he was elected. How much of that is priced left in? I don't know. I think the big news last week, tightening of sanctions on Iran played a big move. I think China have got a big part to play there in how Iran move barrels. How they side with this tit for tat tariffs. I mean, tariffs has become a verb now that he seems to use on a daily basis. It's something that's always been at a president's disposal, but never been as leveraged as much as it has now. The other big one as well, I think, aside from tariffs, was pulling the Chevron license to export Venezuelan crude. Because the irony is, Sean, is what he's doing is, as much as he's trying to assist and help organic domestic producers, he's hurting them as well, because they're a lot more under pressure to produce a lot more. Are they producing the right amount of crude oil that Chevron were reliant on? It was somewhat of a surprise to those producers. So I think, rather than hyperbole, which we've become accustomed to with him, the one thing that he has been surprisingly predictable. And I think a lot of people were pricing in unpredictability. He has done what he said he was going to do. It shouldn't be a surprise, and I think markets are largely selling that risk premium out of the market. And I think it's at the moment it's an OPEC story where flat price is trading, but I think as we get towards the end of the first quarter, it will be a demand story and where that starts to look like. And as Ali said, it will be really where the fundamentals. Just going back to Ali's point, just quickly. April is the right time for OPEC to bring back oil. And yeah, it took a lot of people by surprise, but seasonally, the market becomes, especially in Europe, comes into a deficit in crude oil. And if OPEC want to position themselves as, you know, as key producers to the people who are going to buy their oil, then seasonally they want to be at the front of the queue. So I think it's the right time. It's one of those decisions, like when, you know, when Arsenal won 7-1 last night, I was like, sorry, I had to put it in there. Do you remember the Champions League, Sean? Sorry, that was cheap. That was cheap. Sorry. But you kind of look back and think, well, maybe that was a mistake and we weren't expecting it. But now you look at it and you think, actually, it's the right timing. So, Q1 is end of Q1. What demand looks like is going to be key for me.
Ali, just looking at the sort of second tier of major sort of pulling tug of war influences, and it's inside the why, as you asked, did OPEC Plus pull the trigger on this decision now? And one of the potential is that they see tightness coming, as you said, and one of those sources of tightness, as was warned by, again, the bombastic language of Trump, and that is not only language, he's actually put into place the policy of maximum pressure on Iran, one of OPEC's biggest oil producers historically, one and a big exporter out of the Gulf. The expectation is to bring back what was that sort of restriction on Iranian oil exports. Now we've had the news in the last 24 hours that indeed Russia may be set to play a role to negotiate a peace or whatever, a rapprochement between the US and Iran. Your thoughts of these jigsaw puzzle pieces as you stitch them together, where that particular one may go?
Well, if we're talking about the geopolitical, I think it's similar to what is happening with the tariffs. Nobody exactly understand the changes that happens on a very dramatic way. First, Saudi Arabia was used to bring the Americans and Russians, and now the Russians are being used to bring Iran into the play. So it's a time that you know,
and they're all
Trump,
happen to be very large oil producers. So whether there's what's the common Venn diagram in which they're all sitting?
Yeah, I was asked yesterday that there will be a dialogue, you know, the energy dialogue between America and Saudi Arabia and Russia, and what to expect out of this dialogue. As I said, you know, they can talk about anything, but without adding any consumers like China or India in this dialogue, then it's just talks. We need to understand what exactly is happening, not only in the geopolitical arena, but also in the market situation. We are in the middle of nobody knows anything what will happen tomorrow. I agree with the statement that maybe the April time is the right time to bring back the volumes. Again, I mean, it is very small.
It's certainly the right time to try, I suppose.
To try, yes, to try. But, you know, the impact, the news impact to the media or to the market was huge. So this is, and we saw that impact directly, that we have about what, $2.5 down now, just because of this announcement. But it has to happen. To unwind this agreement or this 2.2's a million barrel to come back to the market, it has to start somewhere, somehow. So we have to absorb this now and then to go on. We can't just wait and be affected by this news. But again, it is something that we need to check, and we need to see what is the impact exactly during the period of time, not only now, because the amount is too small, and then there is a tightening on China. I'm sorry, on Iran. Maybe Russia will take longer than anticipated when it comes to.
And I suppose it brings up the question, Ali, whether others will start to to use the word cheat, and in sense, the others that aren't part of the eight might say, well, I might pump a few more barrels as well, and it sets the more and more gateway open.
No. It is a standard now with any statement from OPEC. They have to mention about the extra volumes that Iraq was sending to the market, extra volumes from other countries, and they have to comply with whatever schedule that is being agreed by these countries. So it's becoming a standard. But do they comply with this request? I have some doubts. Now
I mean,
you
the
have,
only thing you see with Iraq is now with the Kurdistan issue seeming to be
yes.
resolved, everything about Iraq is more rather than less. Russell, I want to just dig behind some of those data points you mentioned behind the flat price that sort of guides us every day. But you mentioned there the closing, the very unusual circumstances in recent weeks where Brent was trading as a deficit to Platts Dubai, the heavier crude. That is closed now, as you indicate. Why is that close happen? Does that mean we've closed the problem of a shortage of sour crudes, or what's the dynamics?
So the original blowout happened after we saw the restrictions on some of the fleets that actually that guy called Biden did, that you might remember him. He seemed to have put
Last
that in on his
seen
way up.
wandering the hills of Maryland in search of magic mushrooms.
So yeah, that's when that happened. So January the 10th, we saw this quite aggressive move in the curve. But I think where a lot of these things that we're talking about today have all started to settle down. We talked earlier this year about the idea that, I mean, to me, what Trump's doing is it's an open book, and he's bringing together a few different counterparties, if you like, to create the energy book. We know that US production is on its getting close to the top, and then the drill baby drill idea is a bit limited because there's not as much for them to do, even if they wanted to. So Saudi having a stability price that they can look at, which also means their move away from hydrocarbon dominance, and Russian gasoline obviously helps Trump a lot if we can get more of that back into the market. And I think there's a lot of discussion, and Ali can probably talk more about it rather than me, but there is clearly some unsettling geopolitics happening within Iran. So Trump seems to be playing lots of cards, and some of them are going to stick. And I think in this scenario, he played quite a big game between all of these counterparties. If they want to get back into the market, now's a good time to do it. So I think that's what we're seeing. I think it's something that we all suspected. And it looks like it's happening, but it's a big game, and ultimately that's where you're seeing the curve starting to flatten off, because the flows are just going to keep moving. People have become a lot more flexible since the tariff started in how they move things around. We talked about it last week, Sean, at your event, but Shandong is a really good example where all of a sudden a large number of ships that go into their ports are not allowed to. However, that stuff just getting delivered down the coast and coming back in via other forms of transport. So that was one delivery cycle that managed to change. So it's significant, and people are way more flexible to make those changes. So I think that's why the spread has come back in a bit, because people can see.
Sorry, Matt,
No,
the other big factor, as mentioned at the top, that is present, and I'm trying to get a grip on where it might influence the demand side, and that is huge spending programs, right? We had China announce overnight a massive increase, like they've been on a 3% of GDP sort of deficit ceiling for 30 plus years. They've just broken through it now to go to 4%. And as I said, 10% on spending over tax revenues. Germany overnight has announced a massive breakthrough of their constitution to essentially put defense spending outside of what was a cap on debt, borrowings by the government, etc. So huge spending programs everywhere, and of course in America the deficit, fiscal deficit is again in the trillions. So do all of these trillions add up to lots of spending, obviously, making stuff, manufacturing stuff, spending money, putting money in people's pockets, demand, consumption? Your thoughts on all this spending now that seems to be coming around the corner, and its impact for the markets?
No, I think it's a really good point. And, on the government side, I think it's a Trump hedge. I think that it's, if he can, we will. I think that there is an element of patriotism that comes in if he's got to flex muscles, and I think other G20 countries will as well. But, just on the spending one, it's interesting because my biggest takeaway from IP Week, and it is IP Week, was recarbonisation. I think that was a big takeaway from me. BP coming out during IP week saying they're shifting their spending patterns back into fossil fuel production, less into the renewables. It's still very much part of the conversation, but Equinor said the same thing. I'm pretty sure, there's always the delta of corporate responsibility in this day and age, of course, but I'm pretty sure you'll see most majors come out with that, largely in line with what the GCC core have done as well. There has never been a let up in investment in fossil fuels. Look at the Ruwais program, in terms of crude diversification. Look where Ali is, the new refinery in Duqm with the JV with the Kuwaitis. And these are the places that are making money. And I think that the market has had a realization that perhaps 10 years of oil being a persona non grata word that you can usher in the avenues of Shepherd's Market, and that is now back. And I think that that's sort of being, reciprocated from a government level as well. But make oil great again.
But in some way,
it's
kind of bearish, though, isn't it? There's sort of the transit, abandoning the restriction around oil supply financing or infrastructure spend, which sort of contained the supply outlook.
Yeah.
Now it's like spend, and that from a sort of basic supply demand point of view signals more oil from BP and more oil from more supply.
Yeah, look, and you've hit the nail on the head. And Europe is the best example of that. In terms of if you were to go to a Crédit Agricole or other European bank and ask them for $10 billion to build a new refinery, you would be laughed out of the Alps. But if you go anywhere else in the world, but now Europe has hit this realization where energy security is a problem. 49% of Europe, even Ireland, imagine.
It has announced a floating regasification unit. I've been screaming about that for years. I couldn't believe it. I saw the headline yesterday.
No, it's amazing. Even Ireland. But, just 3 years ago, 49% of Europe's diesel used to come from Russia. Now, that trade flow had to change quickly, and patterns have largely stabilized now. But at the same time, you've had a lot of refineries in Europe being mothballed and people continuing to do that. So it's that was certainly Europe is on the catch up with the rest of the world. And I think that you will see continued investment back into fossil fuel production. Okay, we will decarbonize. Of course, that's part of the conversation, but it can't come at the expense of energy security.
Let's go to the survey question, which picks up on a lot of these themes we're discussing here this morning. What's going to have the biggest impact on the direction of travel of the oil price? What will win the tug of war, as I framed it, to have most influence on the direction of oil price? Because it seems like they're all kind of pulling in different directions. OPEC plus supply, which we know starts to increase from April. China stimulus, which has stepped up a level or two, and will it even step up further? US tariffs, which now seem to be signaling clear, and Trump made it the headline piece of his State of the Union last night, that there will be pain at the beginning. He's willing to accept that the US economy will be turbulent as this tariff, not war, but certainly tariff opening shots are unveiled, or none of the above. None of the above will win the tug of war. Which of these do you think sets the direction? Ali, I wanted to get your thoughts also, again, picking up at a few of the threads that Matt mentioned there. Huge story yesterday out of the Gulf was ADNOC's merger with OMV to create a $60-80 billion chemical company, acquire an American Nova Chemicals. This is the sort of the future proofing, as they call it, for the oil industry to get deep into petrochemicals downstream. As a strategy, it's not alone in the region. All Gulf states seem to be planning this or implementing this policy. Your thoughts on the announcement yesterday and what it tells you about the wider strategy in the region?
Well, actually, this tells me two things, Sean. One is that the belief on the American economy is very strong within the region here, and to go and try to invest in America on the petrochemicals is something that not only UAE is doing or willing to do, but also the Saudi Arabians also. They have already mentioned that they will be investing billions of dollars in different sectors in America, and including the petrochemicals. The other thing is that we in Oman here in Duqm, that the talks and also the agreements are already been set between Oman and also Kuwait and Saudi Arabia to start, the downstream, further downstream with Duqm refinery. So the future, I think, in the region here is not only to go and produce the crude oil, but also to go down to the molecules of energy. So I think it is something that we need to watch. But I think this is the future if the countries, the GCC countries, especially Oman, Saudi Arabia, and Kuwait, and UAE, they want to add value to their molecules. So petrochemical is one of them, and gives the right returns at the end. And it is a future of energy, inshallah. So that's
I
my
suppose
reply.
ultimately it signals, we both on the refining side from the point of view of refining oil into products, gasoline and otherwise, or now into petrochemicals. Ultimately, it all adds up to less crude oil being sold in the open market or being available in the open market. And I think that's a trend that one has to somewhat keep an eye on. I mean, as somebody said in London last week, that Kuwait practically doesn't export any crude oil anymore and is on a pathway to. They've built a massive.
It will take time, Sean, to get to that situation.
Yes,
I think
sure.
the numbers of production, volumes are huge in the region. So to stop it completely and to go to petrochemicals and to go to products, I think it will take some time. But that is. I don't see any problem Oman being a Singapore
Sure.
when it comes to producing products and also petrochemicals. Why not?
Yeah, Russell, one of the sort of headlines or parts of the story out of China in the last few days with that China People's Congress going on that sort of went under the radar was the planned China's private economy promotion law. Basically, China, the Congress has indicated that they're going to pass a law to sort of free up the private sector to become a part of the engine of transformation. We saw in recent weeks that the leadership, Xi Jinping and other meeting with the big sort of Chinese entrepreneurs, their sort of tech oligarchs, like Jack Ma and so on. I just want to get your thoughts, insights. Does this present a real pathway to change in China, more economic consumption, progress, the unleashing of the private sector?
Yeah, it does. It's an internationalization of the economy. We're seeing this in a few different places. So China is doing it, and we're seeing it at our business level too. The idea that you can do business with the mainland more openly and access coming in and out. It's not going to be a very straightforward opening of private equity, but the desire is there to keep control and have this concept of pricing power while being able to allow a bit more of an import-export market around not just about commodities, but also about financial activity and things like that. You see the same things in Saudi, and India is also trying to do the same thing. So it's this concept of what we call a closed market and how they try to do that. So it's definitely happening. I've seen it
in
myself.
some ways feels like are we seeing this week the end of the Xi Jinping Leninist sort of recapture of the Chinese economy over the last 5 years since he's sort of signaled and took his third term, that it put a very tight vice grip on the economy and all of the decision making, and even to a great extent curtailed the private sector and the tech oligarchs quite significantly. Now that seems to be ending. The GDP deficit, the spending, the private sector, it feels like an end of a particular phase in China.
Yeah, that's an interesting way to look at it. I look at it slightly that they have taken a lot of control, but now they're using that control to then build their market share. So the market share's growth is international. You can't continue to do that internally. And what they've built, and again, like all of these global south type countries, have a lot to offer, and they can bring in a lot of cash that way. So I think they know that, and I think now with the way Europe is particularly, and US being maybe unstable in their outlook, then it's a great opportunity for the likes of China and India to grow outside of the energy space and technology space into all different areas of business. And like I say, we are seeing that.
Matt, last word to you. It's never missed a chance that when having Kepler on to give us a look at your magic crystal ball of shipping, the unique window you have to where the rates and tanker rates and so forth, and the dark fleet, and the big sanctions that Russell mentioned at the top of the show, how that's playing out in the shipping world, the tanker world. Any sort of cuckoo in the coal mine there that you're seeing that tells us what the direction of travel?
Well, I mean, that kind of advice is very expensive, Sean. But anyway, for the sake of this podcast, no, it's fine.
For the 5 cents version.
Yeah, no, it's fine. Look, it's ever more a fractured market. Russell and Ali both said earlier on. What you'll see is the market's pricing immediately any drama. And we saw that on the 10th of January when the Biden administration announced the sanctions on the dark fleet on Russia. That fractured, say, a particular segment of the market was the Suezmax market, which moved the majority of the Russian barrels. That is predicted. We predict that to continue climbing. OPEC bringing oil back. I mean, like Ali said, it's only 138,000 barrels a day, but it's clear that the trajectory is they're going to try and maintain market share. That is bearish flat price, but bullish for freight. The more barrels in the market, the more cargoes that need to move. We see that there's, US production hit 13.5 million barrels a day on Friday. It's a record high. It will probably stay around there, probably peak at around 13.7 by Q4. But the US crude traders have got to become a lot more competitive. And it will be second half of this year, I think that you will see the US crude producer trying to compete on a market share basis to send barrels east to China. And I think that that's going to, VLCC rates will continue to pick up. But clean products, I'm afraid, it could be a grim summer, could be the summer of discontent because product demand doesn't look that great, but it's a good news story if you're on the crude side of the tanker market.
Well, thank you for that, Matt. The survey results, as you see it there, at least in this room, OPEC plus supply as the winning the tug of war to influence the price, travel, China stimulus, US tariffs in third, and none of the above actually is in third rather than US tariffs. So we'll have to find out what none of the above might be. What are the other ones? Ali Al-Riyami, as always, amazing to have your insights from Oman. Russell Robertson from Singapore, and of course, Matt Stanley here in the UAE. Have a great week, everybody. Thank you, and catch up soon. All the best.
Matt, don't forget to watch Liverpool tonight.
Liverpool tonight. Matt can't see Liverpool. They're too far ahead. It's like somewhere in the distance, there's a red dot.
Well, they're playing with Europe in Europe today. They're playing
Europe.
Paris Saint-Germain.
Okay.
Yeah.
Well, best of luck.